got the, went for,
What page is that on?
well, that's what I'm looking for.
Mr. Chairman, I think it's on page 14. And Mr. Chairman, I think it's for the purpose of grants for community enhancement or economic development capital projects.
This is, Mr. Chairman, when I read this, this is just a direct distribution. It's not an application process, it's direct distribution.
70% of the incorporated population shall. Okay, $15 million distributed. Takes 70% of the 70% of the governing bodies of the cities and towns within the county, within that county. County commissioners and the governing bodies of the cities and towns within that county shall comprise at least 70% of the incorporated population shall certify the state loan and investment board that they have reached agreement on the projects for which funds were used, certify a local match of 1-to-1. And then the rest of us set the population. All right, I think we understand it. All right. Go ahead and open up public comment on House Bill 42. Anybody would like to speak to us today? Anybody from any state agencies or other senators? Seeing none, go ahead. Commissioner Willix, how are you? You wearing your commissioner hat today?
Thank you, Mr. Chairman. Yes, Jim Willix, Converse County Commissioner and President of the Wyoming County Commissioners Association. Here to thank you for the support that has been received so far through joint appropriations for House Bill 42. We really appreciate the 105 that is in there. As you were talking about the amendment for the 15 million, we used to call it consensus funding. And so that's the idea behind it. It gets the counties and the municipalities together to determine the way to spend that money. That has worked generally pretty well in the past. And that number had been as high as 191 million back in 2019. Sorry,
Jim,
Mr. Chairman.
so going back on that one, the this isn't the first time we've done this.
Right.
I think you were just selling that. And this, and by my recollection, is pretty close to how we've done it, if not identical to how we've done it before. Is that, can you comment on that?
Mr. Chairman, I think the biggest difference is the 1-for-1 match. There was not always a 1-for-1 match on the consensus funding. Some counties and municipalities chose the match, some didn't, but the match was not always a requirement in the consensus fund. I don't have all of those dates in front of me, but if you look at the match, it's a great place to use maybe some CARES ARPA funding, and also with the infrastructure that's coming forward. So very, very similar, but I don't recollect that the match was always a requirement at the 50-50.
Did you attend the House Appropriations meeting where this amendment was? I don't know if this was added there, it was added from the floor, but.
Mr. Chairman, I believe it was Representative Harshman that added this on the floor, if I remember right.
Okay. All right,
Mr. Chairman, I have a question.
go ahead.
Mr. Chairman, I just have a question regarding, because this is for community enhancement and economic development capital projects. And in our county, we have a 0.25 economic development tax. So I wonder how many of the other counties have those taxes and have skin in the game in that regard, rather than coming to the state for funding.
Mr. Chairman, Senator Steinmetz, I believe Goshen County is the only one that currently has the economic development tax, but many of the other communities and counties just use general fund or other avenues to fund those economic development ones. Goshen County has chosen to implement that specific tax, but other counties and communities invest in it through their general fund monies. So I know it's come up at least in 1 or 2 other communities that was unsuccessful, that tax. But I believe Goshen County is the only one that currently has it. But I would say all their communities have skin in the game. They just do it a different method.
I thought, when the lodging tax was passed, I thought that all counties got it. I thought they all got it 2%, and then there was an optional 2% on top of that. Did that not make it to that final bill?
Mr. Chairman, I believe what Senator Steinmetz is referring to, there's actually an economic development sales tax that is different from the lodging tax.
Okay.
And so the lodging tax, you're right, depending on how the community was, that split is different. But the economic development tax is a sales tax that the voters can vote on. That's among the 2 optional pennies that you have.
Okay.
But again, thank you for all the work you've done and the support of that. We would in favor of the continuing the consensus if you do so desire, but the 105 is really our baseline and we do appreciate that moving forward. And any other questions?
Mr. Chairman.
Go to Mr. Vice President and then over to Senator Kinski. Sorry, he gets ranked.
But Jim, if you can go to page 14, if you have a copy.
I do not have the bill in front of me, but go ahead.
Well, this is the new section that brings in the $15 million and it says in an amount proportional to the county's population to the total state population. So it'll be strictly distributed out on county population. What was the discussion amongst the commissioners as far as that? And were you guys able to look at what those distributions for the 23 counties would look like?
Mr. Chairman, Senator Hicks, we have not done the calculation. That is slightly different than the distribution of the consensus was before it had used what we, fondly referred to as the Madden formula or other formulations. The bringer of this amendment chose to use population as a simple, straightforward one. We don't have heartburn over that. There's pros and cons to every formula, but you're correct. It is strictly a population-based distribution.
Any other questions? Other questions? Commissioner Willicks, anything else for us?
If I can get the button to work.
Oh, okay. Sorry. All right.
Yeah, so Commissioner, you're aware that in the ARPA bill, there was $50 or $60 million put in there for local water and sewer projects.
Chairman Perkins, Senator Kinski, yes, we're well aware that there are other avenues that are helping local governments either through ARPA, CARES, or other. Yes, sir.
And Mr. Chairman, you're aware there's another 50, 60 million just for local infrastructure projects.
Mr. Chairman, I am aware there, I don't know all the numbers, but you're right. There are some other out there and they come with different strings and different requirements, but there are additional monies out there, correct?
And Mr. Chairman, you're aware there's also 50, 60 million dollars for local healthcare infrastructure projects.
I can't agree to the number, but I know there are pots of monies out there for different purposes with different strings. Yes.
And Mr. Chairman, so that's not enough. We need this extra 15.
Mr. Chairman, Senator Kinski, investing in our local communities is always a good thing. The consensus thing, what I like about that is it brings us together as a community to really decide what our priorities are. All those other monies either go directly to a municipality, directly to a county, directly to a healthcare. We are supportive of the amendment, but I'll be honest, we did not push the amendment when it was brought to us. We agreed that it was a good amendment for the 15 million and we liked the consensus funding. There had been almost $300 million in consensus funding in the past that worked really well that got invested into our communities. But I fully recognize there are other pots of money that this body as either a joint committee or either side of the building have put forward for local communities as well.
Just on that point, Jim, as you look at this, and so if you go to page 15, line 5 and 6, we talk about a certified local match of at least $1 for every dollar in general fund funding. That the general fund, I believe that refers to back to section D, which is that's where this other 15 million comes from, is general fund appropriation. So as I read that, I'm just wondering, do you see any limitations on the source of the local match required on lines 5 and 6? I don't see any. I just wonder if you see any.
Mr. Chairman, I do not. We have interpreted that as any funds available at the local level that are appropriate to use, whether they be ARPA, CARES, or our own general fund.
Right. So out of the pots of money that we were talking about a minute ago, there's several other pots for various grant applications. There's other money that's come from ARPA. There's general funds from counties and municipalities. Any of those sources that they want to match with, it would be available for match, as you understand this.
Mr. Chairman, I can't speak to some of those other categories because I don't know the federal. Some of them are not allowed to be in certain places. So I can't speak authoritatively on whether all of those would. I think many of them were, but I don't want to give you a blanket statement and be incorrect.
No, I'm not asking for a blanket
Okay.
statement. I'm just saying if you have a qualifying project, let's say it's for your local hospital or your local rural healthcare clinic, and you're getting money on this other fund and you want to match it. And that's the project that everybody's agreed upon for consensus money. There's nothing that says that you can't use that as your local match to this and thereby multiply the money that's coming out of the other pots of money that might be available for counties and municipalities on their local project.
Mr. Chairman, I misunderstood your question. Yeah, I do not see that as a prohibition against it. Correct.
All right. Thank you. Go ahead. Thank you.
Mm,
Go ahead,
Mr.
Mr.
Chairman, on that issue, it looks to me like even the 105 distribution in here could then be turned around and used as the match
Mhm.
for the 15 million. There's no prohibition against doing that. That would provide me a little bit of concern that we're matching state money with general state money with state general fund money. And so that's a little problematic for me, Mr. Chairman.
Okay, thank you. Anybody else, any other questions for Commissioner Willis?
Mr. Chairman, if may I address Senator Hicks's comment?
Oh, sure. No, you can't. We don't want you to address, no, sure, of course you can. Of course you can.
Thank you, Mr. Chairman. Senator Hicks, there has been to date no prohibition on the 105 and how we use it. Some local governments use it to match programs. Some of them use it for salary. Some will use for infrastructure. So it would be new to put a restriction on that 105 if that's where you were going. But know that money generally goes into the general fund, is used for what are the priorities in those communities at that time, whether it be matching or operation, as you understand. But to date, I don't think there's been restrictions on the 105 or that equivalent amount over the past several bienniums.
And so following up on that, I remember seeing the former mayor of Sheridan down there, and I'm thinking that it's been pretty common use to take the direct distributions and use to match other grants from other sources in state government. Maybe he's ignoring me now, but anyway. Oh, it's not, you're multitasking. That's good.
We raised our water fees we raised our tipping fees. At one point, we had the highest water rates in the state. At one point, we had the highest tipping fees in the state. Not that I'm proud of it. We had both pennies assessed, and we had reserves in our utility funds. I only came to Cheyenne for the last dollar, never the first. We always made sure that we had a good amount of our own skin in the game.
And Mr. Chairman, I think you would find that is generally what you'll find in local communities. We're thankful for what we get from the legislature, but we, like you, pick up our own bootstraps whenever possible.
All right. All right. Anything else for Commissioner? Thank you.
Thank you, Mr.
Appreciate
Chairman.
it. Good to see you. Hi, welcome.
Thank you, Mr. Chairman. David Fraser, Executive Director, Wyoming Association of Municipalities. I want to echo what the good commissioner just said to you. I want to say thank you. Your actions in the interim indicate we appreciate your actions in the interim, and we appreciate your consideration today. I guess I'll say that. I did take some time in the interim to discuss how meaningful these funds are to our municipalities. In the interest of time, I don't know if I rehashed that. I don't know if I'd tell you anything new or anything that you don't know. So I just would say that, some of our communities are very reliant on the direct distribution, and even those who are least reliant certainly put that to good use, as Mayor Collins of Cheyenne testified during your interim hearings. With that, again, we appreciate the work you do. I'll also add, as the commissioner said, that the consensus money amendment wasn't our brainchild, but we certainly would be pleased if that were to remain in. And if there are any difficult questions, I'd be happy to have Bob come up here and answer them.
Okay, we do always like to phone a friend in this committee. Go ahead, Mr. Vice President.
Mr. Chairman, do you have the figures on exactly how much? Because through both the CARES, but particularly the ARPA Act, there's direct distribution to the municipalities. You know what the total of that has been the last 18 months?
Thank you, Mr. Chairman, Senator Hicks. For those monies, the CARES Act funds, there was direct disbursements made only to entitlement cities, which in Wyoming was just one. So we only had one city of that money got direct disbursements. The rest of that came through the state, and I don't have totals on that with me.
Mr. Chairman, do you know how much money came directly to the cities through the ARPA Act?
I don't have that off the top of my head. I could provide that. I told you I had brought somebody else for difficult questions, didn't I? I'm just teasing. No, my apologies, Senator. I don't have that with me.
Okay.
And then just one other question, Mr. Chairman. You represent 96 municipalities or something of that nature within the state of Wyoming. Have you looked at how this would, this additional 15 million would be distributed based on the formula in here?
Yeah. Thank you, Mr. Chairman. It's, of course, just a straight population-based formula. By the time you get done dividing that by population, we haven't done the math to see how much each would go to each county on that, but obviously it would be enough to make a difference. One of the things that has been important to us is the mineral royalty grants that had been available through the SLIB. Of course, those went away. There was on your house, there was an amendment that would have restored 10 million of that, which didn't make it through. And I kind of see this 15 million as a way to still see to those needs of the communities, but do it as something directly to the communities as opposed to going through the SLIB as that did. I've talked long enough to have forgotten the question. Did I answer it?
No, but that's okay. How do you know that it's going to be equitably distributed between the 96 municipalities under the current formula? Because the way I read the formula, I'm a little worried about Bighorn County, Niobrara County, Weston County, that by the time you divide this up based on population, 90% of the money is going to be gone. And so without seeing those numbers, I'm a little concerned that when it's strictly based on population, you're going to have, we literally have 5 or 6 counties that have less population combined than one county. But yet this is based on population. And so and then you have the next bar is it's going to take 70% of those members within those counties and those municipalities to agree with it. I just would like to see a potential distribution formula and what that looks like. And then how that tears down to those 96 members that you represent. See, and the reason I asked this question, I have 13 municipalities. And I've got Rock River, I've got Medicine Bow, I've got Hannah Elk Mountain, I've got Riverside, Encampment, Farewell, Wamsutter, and they're all little Bags, Dixon, they're all populations of 400 or less. And I just don't see how this money is going to be a significant amount of money to help any of those communities. So can you help me out there? How these small population counties and even smaller population cities are going to be able to participate in this program?
You bet. Thank you, Mr. Chairman. First off, I don't know all the rules of procedures here, but is there a rule against bragging about the great communities that you represent during the
No, they're great communities, but just in looking at that, the way I'm interpreting this was, we'll just take Niobrara County. So my recollection that Niobrara County is about 2,500 people.
Yeah.
2,400. So 2,500 people, it's not quite 2% of the state's population, if my math is right. And so let's just round it to 2% just to make the math easy. So it would be 2% of the 15 million. Which would be right around 300,000, right? So it'd be about 300,000 for Niobrara County. And so, that's the way I interpret the pot. And then what you have to have is 70% of the county in Niobrara. So, how many municipalities are there in Niobrara County? One, that's what I thought. So so as long as the county and the city and the county agree, then off they go. But that's a little bit more problematic for maybe Carbon County. And so with Laramie, and you have that, does it mean that Laramie and the county decide and Rock River and everybody else won't get much of a say? Because that may comprise 70% of the population right there.
If I may, Mr. Chairman.
Go ahead.
The simple answer is, again, we didn't, advocate
No,
for
I
this
just was
formula.
asking about how you understand this to be applied.
Yeah. So we didn't come up with the formula. We certainly were grateful to get it based on any formula. And we wouldn't object if you wanted to discuss another formula for this distribution.
So he phoned a friend and so the friend came up. What do you have for us?
Mr. Chairman, I'm Bob McLaurin. I'm with WHAM as well. I believe if my memory serves me correctly, the last go round, last time we had consensus funding that had that 70%, there was a number that the cities and the counties had to agree before the state would release the funds. And granted, when you have a lot of small cities, it's tougher to do, but my recollection when I was working for the town of Jackson was that in most of the counties, the cities and the counties came to good agreements, and these funds, it was a very, very successful program. There was one or two cases where there were some hard feelings and cities didn't get their projects funded. But by and large, as the commissioner said, it forced the cities and the counties to come together to prioritize the projects more or less on a regional basis. So it was, from my experience, working with the program, it was pretty successful. And granted, this is a lot less money, and for the smaller counties, it's not going to go very far, but it has been a good program in the past. Thank you, sir.
Thank you. Anything else, Mr. Vice President?
No.
Mr. Chairman, if
Any
I
other
may,
questions? Go ahead.
we would also not object if you wanted to make the number larger so we could get more money to those smaller counties.
I'm sure. Okay, thank you. Anyone else to speak on House Bill 42? Anybody else to speak on House Bill 42? One final time, anyone else to speak on House Bill 42? Seeing no, when coming else to the mic, members, what's your pleasure? We'll close off public comment. Before we do that, is there anybody in the waiting room with their hand up? Nope.
Yes, sir, there's one. I'll go ahead and bring it in
Okay.
right now.
Bring them in.
Mrs. Sigmund, if you'll go ahead and turn on your mic and your video, the committee is prepared to hear from you.
I do believe my mic is on, if you can hear me.
Now we do.
Okay, and I'm not sure about the video. I think that's on. Start video.
There we
There
go.
we go.
Now we can see you. I appreciate that because I really don't like looking up at my picture. So go ahead. Glad to have you.
It could be a frightening sight sometimes, sir. Anyway, thank you. My name is George Siglin. I'm the mayor from the town of Lingle. And we're one of the 42 towns in the state of Wyoming that has a population under 500. And I come for you today just to represent our town, and I won't speak for the others, but I think that most of them feel the same way, that we're greatly appreciated of the 105 that the committee has recommended and passed on for you guys for your consideration. The direct distribution means a lot to us. And so with this additional money that was proposed by the good Representative Harshman to put into the budget. Listen to some of the testimony. I will tell you how in Lingle it would affect us on the direct distribution. It is just short of 10% of our budget. We operate on, so you know, we operate right around a 1.1 billion budget, and each year we get approximately, depending on the direct distribution, $95,000. So it's just short of 10%, maybe 8% of our budget. And so we greatly appreciate that, and that helps us maintain a lot of our infrastructure and any other work that we have. We're also, whether you call it fortunate or unfortunate, we have a swimming pool. And everybody knows you have one of those, you got a money pit. And if it wasn't for that money, we wouldn't be able to keep that swimming pool running. So it's greatly appreciated. So I hope that doesn't change. On the ARPA funds, I listened earlier, you asked about some of the direct distribution that we got already from that. And I can tell you this, the town of Lingle will get 2 payments of $37,000. We received one, and we'll receive one again this year. So that would only be a total of $74,000. As you can tell, that's almost $20,000 short than what we get in 1 year from the direct distribution. And on the amendment, is trying to figure it out on the extra money that was put in. I think in the past, the consensus has really worked well here in our county of Goshen County. And yes, we do have a 0.25% economic development tax. And right now we are trying, and I don't know how far we will get with it. We're between the 5 municipalities and Goshen County commissioners, we're trying to come to agreement to see if we cannot put on a 6-penny tax. But I don't know if that will happen for this election year or not, but we are working on that. But I guess my whole point about a small towns are like us, our population is getting smaller. It was like our last census, we went from 468 to 403. So our distribution will be down a little bit more. And we would just appreciate every little dime that we could get to help keep us afloat. And with that being said, sir, I will stand for questions. And once again, thanks to all of you and all of you that are in the legislature for serving our state.
Thank you, Mr. Mayor. Any question for the mayor of Lingle? Thank you, Mr. Mayor. Thanks for your time today. Thanks for zooming in. And Sherry gives you Senator Steinmetz gives you a shout out and a thumbs up. All right, anybody else, Karen? All right, we'll go ahead and close off public comment. Members, what's your pleasure?
Move the bill.
Second,
Bill's moved and seconded. Any amendments or discussion?
Mr. Chairman,
Go ahead, Senator Kinski.
I've got a question. We're supposed to just look at the appropriation.
No, we're the first referral. for this
Okay.
bill.
Okay. I guess this would be a conceptual. I'd like to see if this 15 million is to stay in there, I'd like to see it distributed the way the consensus was in the past, not just on a straight population formula, but there was an allowance for the communities that had fewer resources. It was sort of a modified Madden formula. And I just emailed Ian to see if they could dig out what that was from the prior bill. But when you do it on Congress, when they did this ARPA money, they did it on straight population, which is good for big metropolitan areas, not so good for small states and small counties and small cities. And we've always had the philosophy on these distributions that we tried to take care of, give a little something extra to the poorest of our brethren. So conceptually, I would like to amend the 15 million so that it is distributed using the formula previously used for the direct distribution. And I wish I had that at hand, but I do not.
My suggestion was, because we don't know how that works out, my suggestion would be just work on that and we could get it out of here. We just bring it on as committee of the whole amendment and we can have that
Okay.
discussion, because otherwise I think we don't know what that does and it's going to be hard to vote on it in here. But before it seemed to me that there was some kind of combination of either geographic area and population, or there was kind of a minimum standard, but they're right. There was a different mechanism, just simply proportional population. Anything else on the bill?
Mr. Chairman,
Go ahead, Mr. Vice President.
I think this is a good discussion for the floor. Once we get more information, I'd like to see Senator Kinski's proposed distributions. I'd like to see the distributions under the bill, but I'm not inclined to send the bill out in its current form without that information. And so I'm going to propose, Mr. Chairman, on page 14, line 5 through the balance of that line, that we strike that $15 million appropriation, and then that carries over to page 15, line 1 through 17. And then
Second.
Further discussion? Further discussion? I'm going to vote against that one. I think I'm going to let my preference would be let it go out to the floor. I think if you don't send this out there, I think it'll come back anyway. And so I think it's really important that that you would want to shape this in the appropriate way, but maybe we'll see. We'll see what the appetite for the committee is. Any other discussion?
Yeah, Mr. Chairman.
Go ahead.
We put somewhere between 150 and 180 million dollars towards local infrastructure, water and sewer, healthcare facilities. I think we've more than taking care of the local governments, and not to add another 15 million in. I just, when they've gotten direct ARPA distributions, direct care distributions, and the 105 million, the 15 million just seems gratuitous on top of all that and unnecessary. I'm on and for the amendment.
Any other discussion? Any other discussion? All right, all those in favor of the amendment, say aye.
Aye.
Those opposed, no. Motion fails. Further amendments? Further amendments?
Question.
Question on the bill. Go ahead and call the roll.
Senator Perkins, I believe you had some additional materials.
Oh, thank you. I thank you for that. Thank you for reminding me of that. We do have a technical correction. I think it's in your file. You have proposed amendment S0001. All we're doing there is changing on line 14, on page 14, line 15. Changing it from June to July. And obviously, we're just trying to get that coincide with the first day of the fiscal year.
So moved.
Second.
So we got a move by Senator Kinski and a second by Senator Guru. Any discussion? All those in favor say aye.
Aye.
Those opposed, no. Motion carries. Or any other amendments or discussion on the bill? All right, let's call the roll. Thank you for reminding me of that, Karen.
Absolutely. On House Bill 42 as amended, Senator Guru,
Aye.
Senator Hicks,
Aye.
Senator Kinski,
Aye.
Senator Steinmetz, Chairman Perkins,
Aye.
5 aye.
All right. Senator Steinmetz, you want to do this when we get out on the floor?
Sure.
All right, thank you. Next bill for our consideration is HB 79, Employment Support Fund Amendments. This was, once again here, I guess we can turn it to the last page. We can see what they did with the bills after it left appropriations, what the House did. All right. Looks like what they did is they stripped off the, what's that? These in the employment shall not revert. They just, so that just stays in the, so any, the law and the earnings from those investments shall be credited to the fund. Notwithstanding the other two sections, the monies in the employment support fund shall not revert. So that's stay in the employment support fund. I think I remember some discussion about this, and that the effect of that was it stays in the fund and can be used again. Their department had some other ideas about where they might use some of that, if I remember that right. Go ahead, Senator.
Mr. Chairman, yeah, we talked about this during our appropriations meetings about it was more this was just to keep the fund cash flowing and keeping it whole, more of a bookkeeping function than it was. And there's a handout from Department of Workforce Services in your packet on this bill and on the distribution. We did discuss it at length, but it looks like in the floor in the House, they just said the money shouldn't revert.
Okay. Do we have anybody from Workforce Services here today?
We do. We got a crowd.
I think we got a few. Oh, there.
We got.
I didn't even see the director over there behind that pillar. Welcome, Director Cooley. How are you today?
Good, how are you?
Just fine, thank you. Go
Good.
ahead.
Thank you, Mr. Chairman, members of the committee. Robin Cooley, I'm the Director of Wyoming Workforce Services. And I've got with me my CFO, Robin Martin, here to answer any questions you might have of the fiscal nature, and my Administrator of Workforce Programs, Holly McCamey-Simone, to speak to and answer any questions you might have relating to House Bill 79. It's our understanding and what we had asked for is that these funds basically will just stay in the employment support fund. They will not revert, so that we have a little bit more opportunity to use these funds for some of the purposes that we've outlined in the information that we've provided you. What we found over the past couple of years is we've really been spending more money out of those, that account to fill the gap for services where federal funding has not provided sufficient funds. So on page, I think it's 2 of the handout, we've provided you with a chart there of how some of those funds have been spent. I believe that's over the past couple of years. But as you can see, it does fill in gaps where federal funding has not provided sufficient monies. I would also note, according to current the statute currently, if those funds are not used, they do revert to the UI Trust Fund. And as you know, we've had a lot of discussion about the UI Trust Fund and how healthy it is, one of the top 3 in the country. And we're very proud of that. But at the same time, if we can maintain those funds and allow those funds to be utilized to fill in some gaps for services for individuals in our communities, we would prefer that option as opposed to the money just being swept into the UI Trust Fund without that opportunity.
Mr. Chairman,
Go ahead.
question, and all these monies that we're talking about are UI funds that are generated from the people that pay those funds. There's no general funds here, correct?
Mr. Chairman, Senator Guru, that's correct. And in the last page of the handout, we've provided you with a flow chart of how the UI Trust Fund money, those taxes that are paid in by our businesses, how those monies are apportioned out and how they flow into some of these accounts that you've heard us speaking about.
Thank you.
Okay, so Director, if I understand on page 2, we've got the chart. We've got 3 columns, average federal award, average cost of the average program cost last year by an and then average employment support funds required to run that. So that, again, like you said, that's the gap you're talking about, is basically, if we sum up column 3, that's the gap between what's supported from the federal awards and what actually costs to run the entire program. I'm understanding that graph right?
Mr. Chairman, that's correct.
And so if we add those up, that's an average on the each biennia, you're about just a hair over 9 million short.
Mr. Chairman, that's correct.
Okay, all right. And without this, where's the makeup? I mean, how do you make it? Those costs have to come from somewhere. So without doing this, where do they make up? Are they just made up out of the general fund normally?
Mr. Chairman, I'm going to rely on my CFO to answer that question if you would.
Ask a question you couldn't answer. I'm impressed. But maybe it's a dumb question.
Phone a
We'll
friend?
see in just a second. Go ahead.
It's not a dumb
Go ahead,
question.
Robin.
Mr. Chairman, great question. We would have to take a review of those services to see what would need to be cut in that situation. There are minimal general funds supplied over to the unit 0150, but none on the UI side of the house. So again, without these funding, knowing that Wyoming is a minimally funded state through our federal programs, we would have to take a look at client services and potentially cutting admin costs wherever we could.
So you'd either have to use your director, or Robin, whoever, you'd either end up having to use your flex authority to flex it out of other programs, or you'd have to go to the governor for B11 to move it over from one side of the house, one division to a different division. Is that what I'm understanding?
Mr. Chairman, that would be correct.
All right, thank you. Any other questions? Any other questions? Thank you. Anyone else to speak on House Bill 79? Anyone else to speak on House Bill 79? Okay, is there anybody in the room to speak on House Bill
There's
79?
no online comment, no.
All right, we'll go ahead and we'll go ahead and close off public comment for House Bill 79. Committee, what's your pleasure? Is there a second? Motion by Senator Guru, second by Senator Steinmetz. Is there any discussion or amendments to the bill? Any discussion or amendments to the bill? Go ahead, Senator Drew.
On line 4, strike the word not, strike the period, and then add the stricken language back through the rest of line 4 through line 9. That makes sense?
Okay. Is there a second? I will second it to see what you have in mind. So what are you thinking here, Senator Drew? Help us see.
Okay, what I think I'm trying to do there is to restore it back to where we were, and that was to put the reversion back. And the purpose of that is to restore this money back. And the reason why is simple. It's these money are UI funds that are paid for by those of us that participate in the program, all the business owners of the state, and it's for these programs. And then to either short these programs or have to go through the process of moving money around, I just don't think it's A, necessary. B, if we cut the programs, then I think it's unwise. I know that in other times and in other bills, we have tried in a attempt to be more transparent, trying not to do this and put in the exact numbers. But in this particular case, I think this is a little bit different because it's not general fund money. It's money from this account, money for a specific purpose. And so for that reason, I think it is appropriate to do. And that is why I made the motion. And I hope I was achieving that goal by doing it.
Okay, thank you. Any other discussion? Any other discussion on the motion?
Strike that.
Okay,
Mr. Chairman.
go ahead, Mr. Vice President.
Reinstate exactly.
Sure. On line 4, strike the word not, and then also strike the period after revert. Then add all the stricken language after that through the balance of the paragraph, through line 9.
Go ahead, Senator Kinski.
Senator Groot, if you strike the not, you put the money back into the general fund, which I don't think is your intent.
Ooh, okay, so what am I doing wrong?
You need to,
I think you just want to restore the stricken language.
Just restore the stricken, okay.
so
Sorry.
is that and that's
Well,
the second agrees with that modification. Have you got
Agree
that,
with that
what we just did,
modification?
Karen? All right. Okay,
Okay.
all right, fair enough. All right, any other discussion on the amendment? Any other discussion on the amendment? Ready for the question? All right, all those in favor of the amendment, say aye.
Aye.
Those opposed, say no. All right, that motion has carried. We're back on the bill. Are there any other amendments to the bill? Any other amendments to the bill?
Need all the help there.
All right, are you ready for the question? Let's go ahead and call roll.
On House Bill 79 as amended, Senator Guru,
Aye.
Senator Hicks,
Aye.
Senator Kinski,
Aye.
Senator Steinmetz, Chairman Perkins,
Aye.
5 ayes.
So Senator, you should take a look at line 3 and make sure as it comes to the floor that you're taking a good look at line 3 on page 2. Make sure that does what you think it does. So anyway, we're on to the next bill.
Mr. Chairman.
Yes, go ahead.
We're
Mr.
going
Vice
to go
President.
back in at 2 o'clock.
2:30.
2:30.
2:30. I think Senator Drew is carrying that bill since he's playing with us so much. Okay. And so then I thought we had one other bill. What is that one?
Yes, sir. I believe it was sandwiched between the other 2 bills. It's House Bill 59.
All right. No. All right, here we go. So now we're on House Bill 59, or yes, House Bill 59, Workers' Compensation COVID-19. So this was unchanged as it left the Senate. It's a clean, so it's a clean bill. So, or excuse me, as it left the Joint Appropriations Committee, apparently the House didn't amend it. It's not engrossed. So with that, is there any, do you have any comments on this? Jason, are you on this one?
Mr. Chairman, Jason Wolf with Department of Workforce Services. I don't have any comments. I was just wanted to be here in case you guys had questions for it.
Right. And so if I remember, the effect of this was that we cut the COVID presumption period. It ends here at the end of next month. Is that correct?
Mr. Chairman, yeah, so what this bill effectively does is allow us to extend the non-charge to the employers
Right.
for the COVID presumption through March 31st of 2023. It actually ended December 31st of 2020. But because of the way the employer modification rating works, those charges are not hitting employers until next year.
Right. And but the period for which, so on lines 12 through 14, no compensable injury related to COVID-19 that occurs during the period beginning January 1st, 2020, and March 31st, 2024, which coverage is provided under this act, which a claim is filed on or before March 30. So anyway, we're just amending that, but that time where we have the presumption now is from January 1st of 2020 to March 31st of 2022. Is that incorrect?
No, that's correct. Mr.
Correct.
Chairman.
All right. All right. That's what I remember it. Any other questions for Jason? Any other questions for Jason? All right. Thank you, Jason. Is there anybody to speak on this? Is there any public testimony on House Bill 59? Any public testimony on House Bill 59? Sure, go ahead. Hi. Welcome. It's good to see you.
Thank you, Mr. Chairman. Jody Levin for the Trona industry. I just came to tell you how much the industry appreciates the committee addressing this. This came on my radar from the companies late last year. I began working with Representative Stiff, have had a number of conversations with Mr. Wolf, even with the governor's office to see, was there some way that we could fix this predicament of from December 30th of 20 to March 31st of 2022, employers in theory were going to be charged against their experience rating for COVID claims. This was a third reading amendment that came on in the House to Senate File 19 last year. And honestly, I think everyone just missed it. So we did visit with the governor's office, see if there was anything they could do administratively. They came back and said, no, this really needs to be a legislative fix. So the companies were extremely concerned about what this might do to their experience rating and make them look like they were dangerous places to work, when in reality, they're some of the most safe mines in the world. So my comments today are just to come and tell you how much the industry really appreciates you fixing this.
Okay. Thank you. Any questions for Ms. Levin?
Thank you, Mr.
Thank you,
Chairman.
Jody. Appreciate it. And Jason, do you have any updated information for us? We were asking about various claims on this. Do you have any updated information for us since we were, I think we last spoke in January.
Yeah, Mr. Chairman, I think as of this morning, I can report we have about $9.5 million in COVID presumption claims paid out, right over just a little over 2,100 claims in total.
How much has that changed since we last spoke when we were doing this in hearing?
Mr. Chairman, I believe since our budget hearing in December, that was right around 8 million flat. So it's gone up about $1.5 million over the last couple months.
Okay, I thought it was a little bit higher. But anyway, all right, I appreciate that. And how many death claims we have so far?
Mr. Chairman, unfortunately, we have 22 death claims.
Okay. And what's the pad on death claim?
Mr. Chairman.
I know it depends.
Yeah, it depends highly on a lot of variables, including dependents, minor dependents. I would say on average, I think when I last looked at the average, it's roughly about 550,000 per claim.
Yeah. Okay. And just a question for you. So another question I had is I thought about this. So I mean, so many COVID deaths were a result of, where there's, you know, there's another significant health factor involved, comorbidity situation. And so how did that end up working with the comorbidity issue where the COVID, the presumption of COVID became a compensable injury, but then, and which then, so then it becomes, you know, it ends up being a cause of death, one of the maybe 3 or 4, 5 causes of death, but it ends up being one of the causes of death. How does that work with respect to a death claim? Is that then, assuming that they caught that at work and they were working before that, and then they caught COVID and then they succumbed to COVID in part because of their comorbidity position, is that then the cause of death? Is that a work-related injury even under those circumstances?
Mr. Chairman, that's correct. Under the presumption, there was no, qualifying criteria as to the comorbidity issue. So yes, we do have those claims where, people had those comorbidities prior to, but they got COVID. They passed as a result of that, unfortunately, and, their survivors have filed a claim, which is compensable.
And then the other circumstance is where what happens if if one of their comorbidity issues is the result of a work-related injury? So for example, someone's on some form of either partial or permanent or total disability as a result of a work-related injury, and they subsequently they develop COVID and succumb, but the comorbidity issue, they may not have been working at the time because they're disabled, but the comorbidity issue was caused by a work-related injury. How does that work?
That's a good question, Mr. Chairman. I don't think I've seen any of those to date regarding the COVID issue. I would, if we had somebody in that situation, we'd have to look at it, but I'm sure that, because they were already developed a comorbidity as a result of their work injury, if that was the result of the death, it would be covered. Now, if it was a COVID issue under the current presumption, I think that's going to still be covered as a COVID death. But honestly, we'd have to give that a pretty hard eye.
I think I know about one, so you may start giving that a hard look. Okay.
Thank you, Mr. Chairman.
All right, thank you. Any other questions? Any other questions? Anyone else to speak on House Bill 59? Anyone else to speak on House Bill 59? Anyone in the room, Karen? All right, we'll close off public comment on House Bill 59. Committee, what's your pleasure? All right, thank you. Are there any changes or amendments? Any changes or amendments? Every now, ready for the question? All right, let's call the roll.
On House Bill 59, Senator Guru.
Aye.
Senator Hicks left a proxy vote of aye. Senator Kinski. Aye. Senator Steinmetz. Chairman Perkins.
Aye.
5 aye.
All right. I'll do this one. It looks, I think this one is going to be a 30-second explanation. There's a lot of what ifs that come with this bill. So we'll see. All right. Thank you. So all right. So we're done examining bills, but we do have, where did our LSO folk? Oh, there they are. Hi, Don. We're going to go through and examine differences between the House and the Senate results of third reading on the budget bill. So Don, welcome.
Good afternoon, Chairman, members of the committee. I am conscious of your time commitments to return to the floor, so I will proceed through this as expeditiously as possible. The purpose of this explanation is so that you can then divide the House amendments up amongst yourselves and provide an explanation to your colleagues on the floor, after which time the presiding officer will make appointments to the Joint Conference Committee on Senate File 1.
Do you have any, just as you start, Don, do you have any, what's the best way to present this to the floor, do you think? Do you think it's using this sheet, or do you just go through, do you think it's just better to go through the amendments and just highlight the differences?
Mr. Chairman, I personally think the summary sheet is the most effective way to proceed. As a quick overview, the Senate adopted 37 amendments The House adopted 37 amendments, the same number. There were a few divided on the Senate side. There were also 16 identical amendments on both sides, leaving 21 amendments that were either related or completely different. The House definitely spent more money. Of the identical amendments, both chambers spent $90.2 million in general funds. That's largely from the $75 million appropriation for matching of infrastructure funds. And then the other big numbers of those identical amendments are $7.5 million for community colleges, $3.2 million for developmental disabilities rate rebasing, and $3 million for property tax relief. Of the Yes, 7.5 million. And these are all listed in the top portion of your cheat sheet if you just wanted to circle the big ones. Of the non-identical amendments, I think there are 6 worth noting, and then I'll go through each one. The House essentially spent $46 million more than the Senate. And those really boil down to 6 amendments. They spent $10.8 million for employee compensation at state government, community colleges, UW, that the Senate did not. They spent $10 million for pathways in the Department of Transportation and State Parks and Cultural Resources.
They spent, was it 10 for what?
10 million for pathways.
Pathways, okay.
So pathways to school,
Yeah.
non-motorized vehicles, that sort of thing.
Got it.
And then they made, at the bottom of the second page, $6 million deposit into the landfill remediation account. That's the third major difference. The fourth major difference is about a $6.4 million appropriation from the retirement system for a 13th check. So it's kind of like 13 payments. It shows up on your sheet at the bottom of the second page, that last amendment, and it shows $5 million, but there is a second subsection to that amendment that says funds as necessary. So when you add up the specific amount with the funds as necessary, it adds up to $6.4 million based on our best estimate.
Where's that at?
Bottom of page 2, last amendment. And I should say several of these members missed the deadline on the House side. You must approve your amendment 2 hours prior to convening of the session, both on second and third reading. And the only member who is exempt from that deadline is the co-chairman of JAC. So several of these may show Representative Nicholas's name. That does not indicate they were his amendments. This is a great example. It was not his amendment, but he signed off for his colleague. The fifth significant difference is on the Senate side where you removed the ECA. That's another one that it looks, and it's not on the sheet because it's a Senate amendment. There is no House comparable. That one looks a little weird too, just like this 5 million versus 6.3, because as an appropriation, it's a reduction of 9.3 million. But as a total impact, it's 10.2 million because of the recapture. Thank you. And then finally, the last major difference is now we're getting down to pretty small stuff, but that is in DFS, the CGSB or the Community Juvenile Services Board. The Senate has 1.2 million. The House had 3 million. So you have about that amendment. It shows up on the related amendments near the bottom of the first page, House 2023.
2023 is Wanitzer amendment.
Yes. So I just wanted to give you a kind of a high overview. Those are the big 6 issues in terms of dollars. Now I'll run through these are ordered into 3 groups. The first 16 are mirror or identical. So they're essentially off the table for pursuant to your Rule 13. Then there are a series of 4 amendments that are related, meaning they're very similar in their attempt, but the language is a little bit different. And then the last three on the bottom of page 1 and all of page 2 are dissimilar or unrelated amendments. So starting up at the top, you have the Nicholas Perkins identical amendment to provide for a report monthly from the State Treasurer's Office on accounting consultants. The next amendment, House Second Reading Amendment number 6, Yin, and the Senator Case, House Senate Second Reading Amendment number 5, restoration of $3 million for the property tax refund. The third identical amendment is the Washit Amendment, House Second Reading Amendment number 9, and the Landon Amendment, Senate Second Reading Amendment number 6. This is a $25,000 appropriation for First Responders Conference on Suicide Prevention. Then you have House Second Reading Amendment number 18, the Duncan Amendment, and Senate Third Reading Amendment number 17, Steinmetz Amendment. This is $800,000 general fund, $800,000 federal fund for the residential treatment facilities provider rate rebasing. The next amendment is the Larson Amendment in the House, the Baldwin Amendment in the Senate, which is Second Reading Amendment number 11. This provided 3.2 million general funds, 3.2 million federal funds for DD provider rates. Next amendment is House Second Reading Amendment number 21, the Larson Amendment, and the Perkins Amendment on the Senate side. This provided $60,000 for indigent burials. The next amendment is House Second Reading Amendment number 21, the Washit Amendment, and the Hicks Amendment on the Senate side provided $200,000 for community college rodeos to be distributed equitably or equally to all community colleges with a rodeo program. House Second Reading Amendment number 53, the Oakley Amendment, and it mirrors the cost amendment on the Senate side, provided $7.5 million additional state aid for community colleges. Next one is House Second Reading Amendment number 24, the Andrew Amendment, and Senate Second Reading Amendment number 18, also a Hicks Amendment. This uses language very similar to the military department, provides for, if there are sufficient federal funds, authorization for one AWIC employee in the Forestry Division of the Office of State Lands. Next amendment is House Third Reading Amendment number 27, the Summers Amendment, that mirrors the Dockstetter Amendment, provides $400,000 for Good Neighbor Program, general funds. The next amendment is House Second Reading Amendment number 28, the Summers Amendment, that also mirrors the Hicks Amendment on the Senate side, and that clarified the language on the agriculture endowment, which was adopted in JAC for excellence in research, education, and extension in ranch and rangeland management. The next amendment is House Third Reading Amendment number 17, the Nyman Amendment, and Senator Hicks had a mirror one on the Senate side. This redirected investment income off of the Wyoming in Education Trust Fund away from the grants to school districts and to the school foundation program. House Third Reading Amendment number 21 is a mirror to Senate Third Reading Amendment number 14, which increased the appropriation from the school capital construction program by $464,000 for Lincoln County. The bids had been received just prior to convening or work on the budget. The next one is House Second Reading Amendment number 34, the Walters Amendment, and the Perkins Amendment on the Senate side. This one decreased based upon realized bids by $1 million of school capital construction account funding for the Laramie Elementary School. House Second Reading Amendment number 39, the Nicholas Amendment, mirrors a similar amendment on the Senate side. And this provides for a temporary holding account in the event the two investment constitutional amendments are passed, to give an opportunity for the legislature to meet next session and designate how those funds should be distributed. And then finally, the last identical amendment is the Nicholas Perkins Amendment, House Second Reading Amendment number 54. This is the large amendment, $75 million for appropriation to match federal infrastructure grants. That concludes all of the identical amendments unless there are any questions. Then the next four are related, not identical. On the House side, the Representative Burkhardt Amendment, Third Reading Amendment number 7, very similar to the Cooper Amendment. This provided $150,000 to pursue agreement state status for rare earths and the nuclear materials that are associated with those. On the Senate side, you remove that $150,000 appropriation and put in language up to $150,000 from the DEQ's base appropriation could be used for this. So the only difference is, are you going to pay for it with an additional appropriation or not? House third reading amendment number 48, the Nicholas Amendment, very similar to the Perkins Amendment. This is just technical corrections, but on the House side, we actually had 2 additional technical corrections unrelated to the bill, but they were related to other amendments adopted in the House. House second reading amendment number 23, Zwanitzer's amendment, very similar to Senate second reading amendment number 15, the Nethercott Amendment. This is the $3 million for community juvenile services boards. And again, this was reduced to $1.2 million on the Senate side compared to $3 million on the House side. House second reading amendment number 52 from Rodriguez-Williams, Representative Rodriguez-Williams, very similar to the Hicks Amendment on the Senate side. This withheld $250,000 for 2 agencies' budget until such time as the payment processor utilized by Shop Wyoming becomes compliant. On the Senate side, this amendment only applied to the University of Wyoming. On the House side, it applied to both the Business Council and the University of Wyoming. That concludes all of the related amendments. Now we're moving into the unrelated amendments in the absence of questions. House third reading amendment number 47. This is the Nicholas Amendment. He added $445,000 for the publication of joint resolutions. In addition to the joint resolution adopted last year, there are 4 joint resolutions that are live right now. So we'll continue to monitor that. We intentionally, as staff, recommended one side do this and not the other side. You'll see some amendments on the Senate side that are not adopted on the House for a similar purpose, just to have a difference in conference. The next unrelated amendment is House third reading amendment number 3, the Swanitzer Amendment. This removed the CEO option for the state treasurer and required the new position to be a COO, and also removed IFC from related recommendations as to which position would be more efficient in terms of best practices. House third reading amendment number 4, the Crago Amendment, provided a $70,000 appropriation general funds for the rangeland health grants. That program is operational in the Department of Corrections in terms of a fraction of an FTE is still monitoring it, but there are no new funds for counties in that program. This added 70,000 of new funds. Top of page 2, there's the Rosco Amendment. This is the $10 million in total for pathways. $1 million general fund went to the State Parks and Cultural Resources. $9 million went to the Department of Transportation. And then Representative Schwartz came along on third reading, and he provided a 1-to-1 match of these funds. So that was the combination of those 2 amendments adopted on the House side. House second reading amendment number 13, the Nicholas Amendment, provided that the $1 million appropriation to the State Construction Department for acoustics in this building becomes effective immediate. Only change there is it became immediate now rather than July 1. House third reading amendment number 11, the Sweeney Amendment, appropriated just shy of $1 million of general funds to be matched by $7 million of federal funds. This will look familiar because it was a denied Department of Health budget request by the governor. It's a 7-to-1 match, and it allows for a match of funds under ARPA that are directly provided to the Aging Division through the Older Americans Act activities, primarily nutritional services. House second reading amendment number 27, the Stith Amendment, provided clarifying language on his effort in committee to make the carbon sequestration feasibility study apply directly to public works projects and the materials used in those public works. He also made that $300,000 and the footnote effective immediate in the event that his bill fails. Next, House second reading amendment number 46, the Gray Amendment, put a reporting requirement on the Board of Equalization to report the number of appeal decisions by the board in favor of the residential taxpayer as well as in favor of the county assessor. House Second Reading Amendment number 33, the Harshman Amendment. This moved the two $75 million deposits into the permanent fund, Permanent Mineral Trust Fund and the Common School Permanent Land Fund, and shifted both of those appropriations to the reserve accounts associated with those. House Third Reading Amendment number 19, the Greer Amendment, is a transfer of $6 million to the landfill remediation account. House Second Reading Amendment number 44, the Zwanitzer Amendment, added 20% to the governor's recommendation of $54 million, or in dollar terms, $10.8 million for employee compensation in the equitable proportions for the executive branch, judicial branch, community colleges, and the university. House Third Reading Amendment number 44, the Nicholas Amendment, provided specified that of the $100 million of energy matching funds, 10 million shall be used for public infrastructure for commercial energy development. I believe there are two roads of particular interest that might be of interest there. One in Kemmerer for the new nuclear facility, and a coal mine that is looking to expand in Campbell County. There may be others as well that I'm not privy to. House Third Reading Amendment number 25, the Barlow Amendment. This provides direction in two ways for the first phase towards cash-based budgeting. The first of all is a direction to the Select Committee on Capital Finance and Investments to study this during the upcoming interim. And the second component of this is a direction to the governor to recommend based upon the prior 3-year actual revenues received rather than the forecast revenues. House Third Reading Amendment number 31, the Greer Amendment, provided for any sweep to the LSRA at the end of this biennium, so June 30, 2022, after the first $300 million is swept to the LSRA, then the next 50 would go to fund Wyoming's Tomorrow endowment. If that legislation, which I believe is House Bill 31, is enacted. If that bill is not enacted, this goes away. And I do put in italics right there is under our current forecast, we are not anticipating that $300 million transfer anymore. House Third Reading Amendment number 40, also a Harshman Amendment. This increased the tips for both of the two reserve accounts. You'll recall in statute, the tips are anything over 150%. He's modified that for the period of the biennium fiscal year 22 and fiscal year 23 to 225%. And finally, I think we've touched on House Third Reading Amendment number 45. It's stated as the Nicholas Amendment. This provides a 13th payment to all retirees and beneficiaries under the retirement program. And you can see the calculation is equal to up to 3%, but it's based upon how long ago or how long you have been receiving of retirement benefits. If there's any questions, I'd be happy to answer them.